This is the only trading strategy you ever need. Many traders constantly switch up their strategies, and this is exactly what has been holding them back. All a trader really needs is one strategy that is back tested and it works, and you need to execute it over and over again and learn all the ins and outs. But the hard part is actually the back testing and knowing if the strategy is profitable in itself. You can all skip that by just copying my strategy, because I and many traders that also trade like me have back tested it already, and you can copy it right now. What I like to do when I trade is write down my confluences and structure everything in my mind. So I have one preparation phase and one execution phase. In the preparation phase, we are just sitting on the sidelines and waiting for price to develop itself. We are not forcing a trade, we are not rushing anything, we just wait for the perfect entry and we just observe. We are firstly observers, and the second one will be that we will be executors once we have observed the price enough. The first confluence for me is market structure. So you need to locate a swing low and a swing high. So we see here that we have a breakout structure. The swing low is this one, swing high is this one. Now this swing high was broken by this swing low. This is a lower low, and then this is a higher high. So from this range to this range, from this low to this high, we are bullish, and we wait and we anticipate the market to eventually head up higher to break this new high and create a new higher high. So for this, we need the second confluence. For this to happen, we need the premium versus discount. I need to at least see a 50% FIB retracement, meaning in the retracement, we want from the low to the high, which is in control, we draw it up, and we need to at least see this line get touched. This happened. So now we can move on to the execution phase, or the entry model. For the entry model, we only need two things: liquidity and a order flow switch, or a choke. So change of character, if you want to call it that. It's the same thing. So for liquidity, the easiest way to identify it is to see that in this move up, we have little pullbacks which have under them liquidity. So in this move, we can just highlight the impulse. So we are impulsing here, and in this move we have liquidity here, we have liquidity here, and the most important low is here. So we can delete all of them, because under this liquidity lie the most stop losses of people, and if we break this and see then the order flow switch, there is a really highly likelihood that we will respect the low of the order flow switch. So let's wait for it to come to our liquidity point, and it came in there. Right, now we want to see a order flow switch so we can initiate the next impulsive phase. So right now we are just retracing, and we are in this kind of retracement phase, and now we wait for it to make a new phase which will then eventually push us higher. So we wait for the order flow to switch. As you can see, we were respecting the order flow right here. We have a breakdown, another breakdown, another breakdown. This is internally a trend down in the retracement. We want to break this trend to trade up higher again. So as long as this high isn't broken and this supply zone isn't filled, we think that it will just push the market down lower. So we need to break, then the retracement, and then we can long this up again. So right now we should just wait for it to break. And it broke. So now this demand zone was filled, and we have this break up, and out of this break a new demand zone was created, which can push us higher and to break this higher high. So right now you can already just place a buy here to put your stops below the demand zone and then long it. But as you can see, the risk to reward ratio wouldn't be that high. You could do that if you want to wait a little bit longer and if you are not scared of it to come back, but for me, I want a more precise entry. This is also valid, but the risk to reward is off. That's why I want the entry to be more precise, and I'm happy to miss the entry. So it could be a little bit too impulsive and we just miss it and we don't see a retracement in towards this new created demand. But I'm happy to miss it if I am trading very precisely and very mechanical. So I'm not gonna do any mistakes on other trades. So now, for me, we just repeat the same thing, the same confluences that we did right here. So this is now the inner layer, and now we do again the market structure and the premium versus discount. So we are in the preparation phase in this demand zone. We see that we are bullish from we broke here. We are bullish from this low to this high, from here to here. Now all we need is the 0.5 fib retracement to end the preparation phase. We have to extend it because it rated a little bit higher. So I'm extending it. We wait for it to tap our 0.5 fib. Nice, it tapped. Now we can enter the execution phase again. We look for liquidity in this impulse. We mark out the impulse. Let's do this. So now we have liquidity here and here. I'm gonna delete this so it doesn't bother us. So why is this actually liquidity and this also? Because in this little pullbacks, like here, and like this, it is confirmed that there will be stop losses under there from people that already longed it too early. They did it too early, and we will stop all of those early buyers out. And after that, we can really go into the trade and profit on those. So now we just wait for it to be liquidated, and then we will enter the new impulsive phase up. Let me delete this so it doesn't bother us with any like colors. We wait for the order flow switch. So we liquidated this. This already could be enough to push us up higher, and if it goes lower it will be preferred, but if we get the order flow switch sooner, this will be already enough since we already tapped the 0.5 fib and we took liquidity. So now if we see the order flow switch, we will take an entry. This is the high that is in control right now in the order flow, because this is the last high that broke this low, and this is the high and this is the low. So we wait. Perfect, we broke it, we filled the demand zone, and now we filled the supply zone, and now we create this demand zone. From this demand zone we can already take a long. So I'm gonna put a sell limit there, and I'm gonna put my stop loss under the lows and my take profit a little bit well above the highs. And let's see if we get tagged in. We got tagged in and we see our RTP. Thanks for watching, guys. This was the video. Copy the strategy and learn it, and you will be profitable just like me and any other traders. Trading is very simple. You just need to put your mind to it and every day repeat it, every day, and you will see all of the easy setups that are there. So put down a like on this video and comment down below if you like the video or if you need any more other educational videos.